It is August 10th, and we're looking at a 4-hour Bitcoin chart. And what we've been seeing over the last week are a lot of confusing signals. Or perhaps they aren't as confusing as they seem at first. Today, like other days, what we are going to do is study the possible price movement. In other words, that forecast for this week, 10 days, what the price might do using only, price action, and of course, watching what the institutions are doing, who are the ones that move the price at their whim, who carry out these types of strategies or changes that seem strange at first, and in the end, always go where they want. They take all the liquidity, that is, all the money that retail puts on the table, and they become immensely rich. What we want to do is discover those strategies one by one, start dismantling those clues that appear, especially with volume, and make money the way they do. Let's get into the analysis without further ado with the clues I was telling you about. Above all, we'll get into volume later, of course, which is where the strong hands are. But I'm referring to these signals, especially long wicks at the top, that, when accompanied by volume, of course, signal that change of direction, that change in the direction of the price movement. We saw it here once when it reached the 64s, when it passed 64, and we didn't see that movement from the strong hands we were analyzing, or at least we haven't seen it yet. That appeared again, even a doji with those clear signals. And this time the movement was indeed in the direction we expected, but not with the intensity we were waiting for. And it disappeared again over the weekend. You know that often what the price movement does is start on Friday afternoon and on Sunday night, that is, oscillate a bit and end up exactly the same. This Sunday it followed that pattern with practically no movement. When Sunday night came, which is already weekday dynamics, we saw a strong entry of volume. I'll show you the volume on the 4-hour chart so you can see it. We've seen it, but that volume entry hasn't gone in the direction or the sense that the strong hands expect, that is, downwards. And they immediately intervened in the opposite direction to bring the price back again to that level where they are comfortable, which is between 65 and 65,200. As you could see, the margin is very small. All the clues they are giving us, and the fact that the movement hasn't manifested, each one of them just adds intensity to the previous one. In other words, if with these clues and this volume, we were expecting a fast or at least semi-fast movement down to the area below 64, and it hasn't happened, then we see the same clues again, and it doesn't happen with the same intensity. And now we see them again. It means that these three movements have piled up on top of each other. It's like when in VSA, we see these wicks with that volume and we say there's a pattern break there. And so the movement in the next candles is going to be aggressive. Now we're seeing that same structure, that same mentality. We are seeing it in this circumstance. Because you already know that we have to adapt exactly to what the strong hands are telling us on the chart, and we have to interpret over and over again what they give us. Now, what they have done is add those three elements without having a reaction. We are adding three causes. Once these three causes have come together, we will see as soon as they take advantage of some element. For example, the volume inflow, which usually occurs at 3:30 p.m. Spanish time, which coincides with the start of fund positions on the New York Stock Exchange. Many times we see those aggressive movements, and in that case, if the movement were downward, the strong hands will indeed add up those three elements that have further loaded the New York Stock Exchange movement, and we could see a very, very aggressive downward movement. What is the movement of the funds? Obviously, the strong hands cannot foresee it. They cannot know what they are going to do, but they can certainly use it. That is why there are two possibilities today, August 10th, looking ahead to this week. The first one, always in the medium short term, that is to say 7-10 days, we're going to see the price at some point when they break those three conditions, plus the circumstances that I'm telling you about New York, we are clearly going to see the price below 64. The problem is when we are going to see it. We have to be attentive to that volume entry. And if the volume entry does, in this case, coincide with the intention we are seeing from the strong hands, we could indeed see that clear movement today towards touching 64 and then breaking it, because it is the strategy we are clearly seeing from the strong hands, adding up these three elements. Very well, we have that forecast set. You know that we don't use indicators beyond volume, because in volume, the strong hands leave their footprints. They leave their intentions, and that is what we are following. We remove the other indicators that only serve to add noise, add complication to the chart. We have to keep it very clean, and we can analyze any element at a single glance. Important, of course, supports and resistances. We have seen 60 and 68 of the channel. Right now, we don't really take it into account because the movement is so stalled. There is so little movement that 68 already seems like a distant madness to us, and 60 almost even more so. Even 64, which is the mid-channel zone that dominated throughout August, you see it tracks the price like a magnet. Even that position, that level, seems certainly distant to us. The moment the breakout happens, we are going to see the aggressive movement. And then we will understand that it was the movement that was building up. Let's hope that starting today, August 10th, we begin to see that breakout, that aggressive movement, and see real movement on the chart. Because often when we trade, we usually place positions for a day, for a few hours, sometimes for minutes. And seeing such a stagnant chart is honestly not encouraging and doesn't motivate. In any case, if what you do is intraday trading, scalping, or swing trading, and you see the chart under these circumstances, often the best thing is not to enter the market, because not entering is also taking or deciding on a position. In other words, with what you have, you are protecting that capital during these days that the chart is like that, because you're already seeing it go from 60, from 65 to 65,200 over and over again. It's not a movement that gives any profit. Maybe for scalping or intraday, it might be almost enough, but we look for at least 300 points minimum in scalping or intraday. You see here, 10, 15 minutes, we start to see signals. We saw this stopping wick, and we've already seen this downward movement. But in any case, it's not a very significant percentage. You can see that it's less than 0.5%, and for scalping, that would be somewhat sufficient. But we look for some movements that are a little bit more striking. In any case, the circumstances you have to look for in scalping, are three: volume entry, arrival. If you're interested in making money with trading, whether professionally or as a side job, I've designed a course where you'll stop looking at indicators and start understanding what the market is really doing, what the strong hands are really doing, and you'll be able to make money the way they do. Let's continue with the analysis. A support or resistance zone, which I explain exactly how to determine easily in my course. They are different across all time frames, especially on the 15 or 30-minute charts, where they have their own personality. We have to look for that zone. The appearance of some element in the Japanese candlestick that tells us that a struggle is taking place behind the chart, such as a wick or a doji, and volume. Those three elements give us a very high probability of entry. For example, we've just seen it now, and we're seeing that we're waiting for that downward movement in the long term, medium term, and on the weekly. It coincides, and it was a very good moment to enter. Now, probably when it reaches the 60, 65 zone, maybe a little less, we'll start to see this structure again. In other words, a stop, rejection wicks, some volume entry. It doesn't need to be exaggerated volume. And at that moment, it will also be a good time to go long to capture those 200, 300 points. I wanted to mention that if you like scalping or intraday trading, there's a VIP Telegram group with 100 spots, which are all filled, but I'm still letting people in who meet this condition, which is signing up for the exchange I use for all my trades, which is mexc.com, and making your first deposit. MEXC will give you a $50 reward, and I'll give you a free month in the VIP group so you can see the signals. There's also a parallel discussion group where people share their opinions. There are many opinions, all very interesting, and you can express what you think with total freedom because it's a closed group and people are very respectful of others' opinions. I'm Michael Vasquez, and this is Daily Bitcoin Analysis. I really appreciate you watching this video, and as I always tell you, this is not financial advice. Rather, I am sharing my experience with you after more than 15 years in professional trading. Stay tuned for tomorrow's video. Let's see how volume comes in at 3:30 p.m. Spanish time from the New York funds to see if the strong hands use that start to finally break the 64,000 barrier. And we see some movement in the chart, which has been so stagnant in August. See them all.